Hi guys, today we'll discuss Meta's latest results and valuation. Before we start, please don't forget the financial disclosure. This is neither a buy or sell recommendation on the stock, and I'm not a financial advisor, so please remember to do your own research. I have no position in the stock at the moment. The current price of the stock sits at $200 as of the close of 29th April 2022. And even though the stock is currently attractively valued for long-term investors, I rate it only as a potential buy due to the macroeconomic uncertainty. There could be chances to average down on the stock at lower prices, so do invest cautiously. I'm not giving a target price on this given the high certainty around the stock, and the negative sentiments are likely to weigh on the price more heavily than any notions of fair value. Meta stock has widely underperformed the S&P 500 index in the past 1 year, down a whopping 38% versus down 1% for the S&P. This was due to macro uncertainty, competition from TikTok, targeting headwinds, and most importantly, a first ever quarter-on-quarter daily active user decline. With such a major correction, valuation levels have reached all-time lows. Therefore, let's examine some of the major earnings commentary and headwinds around the stock, as well as whether valuation levels are attractive enough. After Meta reported its Q1 results, shares rallied strongly, showing that the results were better than what investors had expected. Total revenue came in at around $27.9 billion for the quarter, up 7% year-on-year, but EBIT margins contracted at 31% versus 43% last year. Overall, the company reported an earnings per share of $2.7 versus 3.3% last year. For the second quarter, the company guided to revenue in the range of $28 to $30 billion and mentioned that this outlook reflects a continuation of macro and geopolitical headwinds. Let's look at how this stacks up against analyst estimates. Revenue for this quarter came in around its midpoint, but slightly below street estimates, as you can see from the yellow box. For the second quarter of 2022, analysts are expecting total revenue of around $29.6 billion, slightly higher than midpoint of management guidance of $28 to $30 billion. Analyst estimates represent a flat year-on-year trend from the second quarter of 2021. At the lower end of management guidance, this would represent a 4% decline year-on-year. As for operating results, daily active users and monthly active users have both increased year-on-year, with daily active users increasing around 2% from the fourth quarter of 2021. In the fourth quarter last year, DAU decreased for the first time ever quarter-on-quarter, which caused significant investor concern. While concerns around DAU growth still linger, I think investors are more focused around the state of the world economy at large now. The company repurchased $9 billion worth of stock in the first quarter, and the company still has a healthy cash balance on hand of around $43.9 billion. Let's review Meta's earnings call transcript. Mark Zuckerberg, which is the CEO of Facebook, kicked off with comments on some of the broad issues Meta is facing. He points out to the following key areas. Firstly, the lower monetization of short-form video or Reels on Instagram, as core Facebook now has lesser engagement. This area is also highly competitive when you consider TikTok as well as YouTube Shorts. Secondly, IDFA headwinds from Apple's iOS changes, which means that these privacy headwinds resulted in more aggregated, restricted, and delayed user data for ads targeting. Lastly, Meta is also facing the impact of macro headwinds in digital advertising, exacerbated by lower e-commerce advertising. Mark said that there are three main investment priorities for the company, namely Reels, ads, as well as the metaverse. For Reels, 20% of time spent on Instagram is now on Reels, and management is happy with the engagement. As Meta continues to invest in Reels, management expects short-term headwinds on monetization due to the lower rates. This was also similar to the company's transition from feed to stories. The company is also facing iOS headwinds, but Meta is looking to invest heavily in AI tools that will help differentiate the company to advertisers. And how is the company attempting to do this? They are working with advertisers to adapt tools like its conversion API. They are also trying to do conversion modeling, on-site data conversions through click-to-message advertisements, as well as pushing more commerce on-site in the medium term. As a result, Q1 expenses were up 31% in total relative to last year. In terms of specific line items, cost of revenue increased 17%, primarily driven by core infrastructure investments, payments to partners, and content-related costs. R&D increased 48%, mainly driven by hiring to support family of apps and reality labs. Marketing and sales increased 16%, mainly driven by hiring and marketing spend. And lastly, general administrative costs increased 45%, driven mainly by legal-related costs and employee-related costs. Meta added over 5,800 net new hires in quarter 1, the majority in technical functions, and ended the quarter with over 77.8 thousand full-time employees, up 28% compared to last year. These are some of the questions asked by sell-side analysts during the management Q&A session. Firstly, one analyst asked about how we should think about capex intensity going forward. The company responded saying that the company is investing significantly in AI as well as machine learning, and there's additional capex intensity of the business beyond just additional capacity growth. Another analyst asked about the metaverse investment cycle versus the monetization cycle in future, and Mark said that the cycle between monetization and investment is expected to be long, and much longer for reality labs than for traditional software. High growth rates for expenses are due to the expansion in product teams. Mark expects reality labs to scale or monetize in a significant way only later in this decade. And another analyst asked about how headwinds for Apple privacy will evolve. The management said that quarter 2 outlook has already factored in privacy headwinds from the iOS changes as well as the Ukraine war. The company expects that quarter 3 growth rate to be modestly higher from the quarter 2 growth rates. And one last analyst asked about the macro conditions of the company at large. The company responded saying that growth had slowed in all regions due to pricing headwinds, with Europe decelerating very meaningfully. In North America, targeting and measurement challenges continue to impact growth more, and impressions were down year-on-year in quarter 1. For APAC and the rest of the world, it benefited from strong demand in products like click-to-messaging ads. And I would like to point out a few graphs from Morgan Stanley's broker reports. Overall, we see that total social media time rose 14% year-on-year in first quarter for US daily active users. No surprisingly, TikTok was the largest driver in total time growth, up 44% year-on-year, followed by Instagram, which saw total time spent grow by 18% year-on-year. For Meta, total time spent on Meta grew 5% year-on-year in first quarter according to Sensor Tower, the third straight quarter of year-on-year growth. Rising Instagram users and time spent per user continue to drive Facebook engagement. That said, time spent on core Facebook continues to decline, down 5% year-on-year in first quarter. Analysts are also speaking about cannibalization effects due to ramp-up of Reels engagement. Therefore, the key message I wanted to bring across here was that indeed, efforts to grow Reels engagement seem to be paying off well, but lower monetization rates could pose a drag on revenues. So let's look at some of the trading comparables of Facebook. On its historical 5-year next 12-month PE chart, Meta's average multiple was at 24.8 times. One standard deviation below its historical mean would be at 20.9 times, but the stock is now trading at 16.5 times, which is 2 standard deviations below the mean. This is almost the lowest it has been in 5 years. The S&P 500 index is now trading at 18.5 times, and Meta's multiple represents an 11% discount to the S&P. I would say that this is quite a significant discount. Against its advertising peers, namely Alphabet, Snap, Twitter, Pinterest, and Zillow, we see that Meta has multiples that are below its peers. Its price to sales for calendar year 2022 is 4.3 times, compared to a median of 5 times for the rest. Its EV over EBITDA for calendar year 2022 is around 8.9 times, compared to a median of 16.7 times for its peers. Its PE for calendar year 2022 is around 16.5 times, compared to a median of 22.4 times for peers. I would say that just by looking at these multiples, Meta is looking very attractively valued. Clearly, I think that Meta is an obvious play for long-term investors, but this stock does require a lot of patience given Mark's statement on the long investment cycle needed before monetizing its metaverse. There are also many short-term headwinds clouding the stock, some of which are company-specific and others pertaining to the macro environment at large. I will consider buying the stock, but likely not my entire position, as I plan to average down in weakness. So do you have Meta stock, and what are your thoughts around this company? Please leave them in the comment section below. Consider subscribing, and see you next time.